We'll move on. My colleague Ajay Sharma caught up with the market analysts to discuss Reliance Industries' performance in the fourth quarter and its implications on the market. Listen in.
Prima facie, the numbers look definitely better than expected, particularly in the evening when the Jio numbers came out, I think, which is largely a flattish kind of a number that one has seen in case of Jio. I would think that there are two things which could possibly have made the difference here. One, better than expected numbers on the refining side of the business, and two, better than expected numbers on the retailing side of the business. These two things could have possibly made the difference. We'll definitely have to see the figure for comparison purpose. But to my mind, I think these two areas would probably make amount of difference. The third surprise thing could be, I think, either from the oil and gas exploration or from the financial services, where I think they could possibly report numbers separate. So we'll have to wait and see what the numbers are.
Mayuresh, all the numbers have actually come in. Modest growth on Jio and retail, but O2C seem to have done the most of the heavy lifting. How was the street expecting, and how do you see the reaction on the stock price with this kind of performance?
Very good evening, Ajay. No, you're absolutely right. I think, as Devin Bhai also mentioned right now, I think on the retail part of the business specifically, the margins have come in approximately around 7.1%. The large consensus was 7%. So to that extent, the retail part of the business is holding up, and with new brands getting added to that core part of the business, along with more store additions, that part of the business should hold up. On the O2C, Ajay, as you rightly asked, I think Singapore GRMs for the better part of this quarter were close to $8.5. And therefore, with Reliance's ability to source different feedstock, the GRM number would definitely have been on the better side compared to Singapore GRMs.
Sushil, the retail store expansion or rollout, up till now, they were very aggressive on store rollout. But now the base has gone up, and plus some softness on the consumption side, at least till last quarter, it was quite visible in many of the other categories also. Can that become a bit of a challenge in the near term, I'm asking? 1 or 2 quarters.
Ajay, this question for me?
Yeah, correct. Sushil.
I think they have already reached a store level of 18,000. And if you look at the revenue kind of generation, what their per store footfall and the basket size getting improved, I think revenue per store per square as you roll out your own products, your brands, reach getting better. And I think there would be development, because as the entire distribution chain of theirs expands, I don't see a big slowdown, because their formats and store style and experience now is getting at the luxury end as well as at the bottom end.
Let's keep it going then with Reliance. Those were the analysts, but what are the brokerages saying this morning as well? Positive notes are what we're seeing coming in for Reliance. Everyone has seemed to have maintained their ratings coming in. Let's start with JP Morgan. They're maintaining their overweight rating. They're given a target price of 2,960 rupees per share. Like you can see, Motilal Oswal too maintaining its buy stance and a target price of 2,800 rupees per share. Jefferies too maintaining the buy rating, target price of 3,100 rupees per share. Now, JP Morgan specifically is saying that the O2C business is something that has driven the profits of the company. We spoke about that as well. And they believe that both Jio and retail were softer than what was expected. For FY23 was a year of investments for the company, mostly in the consumer side of business. We've seen a lot of acquisitions that have come in from Reliance as well, and especially in the retail side, the consumer business. So that is what JP Morgan is highlighting. They see a very attractive risk reward for Reliance, and that is why they're maintaining and remaining overweight on Reliance. Motilal Oswal too continues to maintain its rating. They believe the value for refining and petrochemical segment is somewhere at 7.5 times the EV to EBITDA, and standalone is something that is shining. Consumer business remains steady as well. Jefferies too highlighting the beat coming in the O2C segment. Especially they said the O2C and the Jio segment is something that was a beat according to their poll that which they had as well. Comforting leverage on the guidance is something they're positive on, and valuation is favorable. Though the net debt rose, the management has allied other leverage concerns as well. So yes, they have upgraded the FY24 FY25 EBITDA to 3%, and the target price is at new target price is at 3,125 rupees now. Keep an eye out on Reliance today. Surely this heavyweight is going to be in focus.